Give us an idea of Xapo Bank, because in South Africa and in Africa, perhaps it's still not that well known. My understanding is it's the only Bitcoin bank that there is in the world. And perhaps you better explain, what is a Bitcoin bank?
Sure. So let me give you a bit of a random bit of context. So I think in today's world, like most banks are exploring the technology, or let's just call it the asset class. And you don't have to take my word for that, obviously. I think, Vanguard are looking at their ETF access points for clients. Morgan Stanley are sort of offering crypto trading now. They're calling it the kind of tip of the iceberg. JP Morgan now have the integration with Coinbase for credit cards, all of the good stuff. BlackRock. Everyone knows about the ETF that's raised about $80 billion. I think the fastest growing ETF in their history. Now they're going beyond that to look at a Bitcoin premium income based or generating ETF. Also, Citibank. That's interesting because they're talking about stable coin payments and services, and everyone else. Visa, I mean, you go across the board, they're talking about Bitcoin credit cards. So all of this is exploratory stuff. Most banks or financial institutions are looking at integrations or access points in different ways, and I can talk forever about different banks. We're very different. So we're a Bitcoin native business. Xapo was, let's call it the original big. It was always referred to as the Fort Knox of Bitcoin back in 2012, 2013. We built like nuclear grade military vaults in the Swiss Alps as part of our security infrastructure. Everyone thought it was crazy. We were writing, papers around the case for a 1 or 2% allocation to Bitcoin in 2014, 2015, 2016, 2017. Now BlackRock say that, and it's great. Now Morgan Stanley say that as well, and that's great. But to summarize it, we are a Bitcoin native business that's always believed in the value proposition of Bitcoin as an asset and as a function. And we've built out the banking piece as on top of that. So we're not a bank exploring the Bitcoin ecosystem. We're a Bitcoin native business that's obtained a banking license. And why do we do that, or why do we think that's relevant? I'm a big believer in let's just call it a convergence of systems. So I don't think we're going to end up with, a crypto universe, whatever, unregulated and people doing loads of crazy stuff, and separate to that, a financial services world where, anyone can have a bank account. I think the convergence will start to happen, and it's already kind of happening. So the story of Xapo, in answer to your question, it's long. We're a Bitcoin native business. We were one of the largest or the largest Bitcoin custodian in the world. We sold our institutional business to Coinbase in 2019. That was around 1 million or 900,000 BTC. So we know our stuff on that side of things. But we wanted to, the value proposition is a way to protect and store your wealth. And we believe a secure bank account is one part of that, and an access point to a secure regulated access point to Bitcoin is another part of that. So that's a long, broad brush overview.
Oh, that's awesome, mate. So, Joey, I mean, Xapo was one of the first to go from a cold storage vault to a full-blown licensed bank, right?
Yeah.
What were some of the toughest trade-offs between crypto ideals and banking compliance as you went through this transition and sold off to Coinbase?
Yeah, I mean, remember, we only sold the institutional business at Coinbase, and that's because we wanted to focus on individuals, let's just call it the marketplace, the retail universe. So if you're based in South Africa, or your cousin is based in Argentina, or their friend is based in Thailand, etc., it's actually not that easy to gain access to secure banking infrastructure. Let's say a US dollar bank account. It may be in South Africa, but it certainly isn't in lots of parts of the world. So that was our target. And we also believe, again, if you think about countries with, high inflation or currency issues and devaluations, etc., again, it's very difficult for them to get access to a secure banking service that simply offers them USD. So that was a starting point. The trade-offs, and that's a really interesting question. So and this is the same with everything, right? So we were part of the Libra DM story. I was a representative on Libra. I use that as an example sometimes because, Libra is a good example of a platform of very large companies coming together to try and operate a regulated global stable coin within, let's just call it a global payments infrastructure. It was branded as a Facebook initiative, et cetera, et cetera. We don't need to go into all the politics. What the facts are, everyone wanted to do everything appropriately to be licensed and operate in a secure environment. And that led to problems and to other problems and to other problems. At the same time, the unregulated payment infrastructures, the numbers were astronomical and they were getting bigger and bigger and bigger. And eventually you come around to European law, and eventually you come around to the Genius Act in the US, and eventually. And the reason I'm saying that is it's a good analogy for us. When we wanted to offer people banking services, it's a very fine balance. If you're too far ahead of the game, it's extremely painful. So you have to, but at the same time, we have a very strong belief in what's coming. So you do want to be ahead of the game. So that's always a question point of finding the balance. The way that we got there on the banking side was to be like ultra. So we offer no debt. We have no credit. We have, liquidity coverage ratios of like 7,000%. We have tier 1 capital ratios of 450%. It's narrow banking. So from an authority's point of view, we're not trying to do anything crazy with anyone's assets. It's really, really safe, boring, secure, and narrow. So that makes it much more comfortable. And then from the BTC side of things, again, not to go into regulatory deep dives, but the world has started to look at how to regulate this industry in 2019 when the Financial Action Task Force published their recommendations, and countries need to consider that, all of the good stuff. We helped build out frameworks that had proper prudential regulation and oversight of the Bitcoin related activity. So those assets are completely segregated, off balance sheet, insolvency remote, etc., etc. We do monthly reporting, deep dive audits. I mean, security tests to the ridiculous degrees. So you have to. It's a conversation point. You're never going to have a discussion with any regulator in the world who go from not understanding a technology to regulating it and allowing for interaction with the banking service. So it's a long, years and years of long process. But the reason we did that is that we felt pretty confident of where the outcome was going to be in terms of things like the alignment of regulatory standards and everything else. And it was risky, but we do think that it was the right call. And that's really where we're going, where we are at the moment. Yeah.
And to add on to that, what makes a jurisdiction really crypto ready, not just on paper, but in practice? What do you think a certain jurisdiction like South Africa, for example, as a regulator need to do in order to be crypto friendly and crypto ready for its participants?
Yeah, that's a good question. I think the key, so it's the never-ending debate of finding the right balance between supporting innovation, but creating a secure, let's just call it consumer-friendly environment. So if you go too supportive of this technology as this wonderful new thing that should operate outside of the scope of anything, you end up in pretty bad scenarios and really risky scenarios. So if the bar is set too low, what tends to happen is you end up in problem scenarios. And then when you end up in a problem scenario, the authorities react. It's a very very reactionary. And they get very, very nervous, and it ends to a sort of cut down. If you go too high and you go into very, very prescriptive rules-based systems and they're all unbelievably detailed, because authorities feel, from groups like the FSB, the Financial Stability Board, they've always said, same risks, same rules, same regulation. And I'm really not a big believer in that at all. It's a new technology. It's a new set of services. There could be similar rules, but it's finding the balance and not going too prescriptive and OTT, but also not going too low, because you need to create like secure and balanced environments. And that it sounds relatively simple, but it really isn't. And we've all seen in different parts of the world, you know, how that's sometimes they don't quite get that right. And then to add one thing to that, the issue with getting it wrong is if authorities go like too over the top in developing what they believe to be unbelievably secure, restricted frameworks, what happens in the ecosystem, as all of us know, people want accessibility and they want simplicity. So they just move to unregulated markets. They move sort of off chain. They move onto all the peer-to-peer networks. They move into totally unregulated, let's call it DeFi space, and that's fine. And people should be they should be able to take their own risk. But if you don't give them any other options to operate in a very secure environment, if you're a techie and you're looking to explore something a bit more risky, absolutely you should be able to do that. My mother doesn't want to be able to do that, but she does want access to like a secure environment to hold an asset that Morgan Stanley say should form part of a balanced portfolio. So that's the balance, like trying to find that piece in between that doesn't push people into the unregulated
and of course
universe.
use it, right? So being able to spend it, because if you're saving in some asset, you want to be able to use it and spend it freely where you like, right?
Absolutely. Like simplicity is, if you talk about mass market adoption and retail adoption and all of the good stuff, it has to be through a very, very simple integrated. My mother, again, to use her as an example, doesn't want to understand how MetaMask works and have some sort of integrated key solution for deployments on XYZ. She also doesn't, and I don't really understand how TCP IP, the language, works. I just want to go onto Amazon and order some stuff. You don't need to be able to, you shouldn't have to understand the way a technology works and functions to be able to have access to it and use it securely. And that's up to, the designers and the people in the network and the developers of the systems and the applications and companies and all of the good stuff. So, yeah.
Joey, just like with our own experience, we found it much more valuable to the user to look more like a bank than like a crypto exchange.
Of course.
If anything, I think that has created so much of value for us. I assume that led to the success of Xapo Bank as well.
Yeah, absolutely. I mean, and I could go really forensic. I mean, if you look at, so the way that some platforms, and let's say it can be some exchanges. I mean, I can show you, a graveyard of exchanges that isn't, just like FTX. There are like thousands of platforms on there that blow up, and it's always this thing of counterparty risk. So you're based in South Africa. If you open a bank account with a South African bank and then open another bank account with a Singaporean bank and another one in London and another one in the US and wherever you want, then not legally, the frameworks or the regulatory standards are not copy paste from South Africa to London and Sydney, but they're very similar. There are standards across. So if you open a bank account, there are certain rules and standards that you as a consumer can rely on and have a degree of security with. If you open it with an exchange, nobody does deep due diligence on an exchange when they open an exchange account, and they don't look at the regulatory status, and they don't even look at what that regulatory status means. So there are lots of platforms in the world that operate, and they have compliance. They have to do an onboarding process when someone opens an account on an exchange. That's great, but doesn't provide any form of security for that user's assets on that platform. So when we'd always say in the crazy FTX scenario, when that massive exchange blew up, there was no controls, there was no proper governance, there was no management really. There was, the risk, the CRO, chief risk officer, had 6 months of experience in risk, and then she was operating the risk of a global cross-border digital multi-billion-dollar trading platform. And the analogy I use is that, if any of us put our families on a plane to fly somewhere, you wouldn't do that on a plane where the pilot doesn't have a license, right? You wouldn't put it on a 18-year-old who's played a game and now thinks he can fly a commercial jet across the world. So if you wouldn't do that on a plane, why would you do that with, all of your savings and everything else? Put it on some unregulated platform that's doing you don't know what. So counterparty risk is a real thing in the crypto ecosystem. So
there's there's a couple of people like listening in the audience who are in their 20s, late 20s, early 30s, maybe mid 30s as well, who probably got normal bank accounts in South Africa, got a bank account with NBD in the UAE. Are they supposed to migrate off these platforms and migrate to more crypto-friendly banks? Can they expect to get access to digital assets with their current banks? What does the future look like? I think people just want to know if they should be investing in Bitcoin or using Bitcoin. That's what people want to know.
Yeah, I mean, look, I think that yes, those banks will eventually get there, but I think lots of banks will be very, very slow and will take a long, long time. So it's happening with DBS in Singapore. It's happening with Safra and UBS in Switzerland. It's happening across most of the US now, really. Well, the bigger guys, but it's still not sort of being adopted by all banks. No way. So to give you another analogy, like in the UK, retail users to gain access to a regulated Bitcoin ETF, that's been restricted for like 5 years, and now it's slowly changing. The authorities are slowly coming on board. So I do think that it will get there. And in terms of should people buy or sell, obviously we're never going to say, you should or shouldn't buy or sell. But I mean, the models that you're seeing now are that on a balanced portfolio. We've said from the beginning of the Bitcoin ecosystem, people should have a small, 2 to 3% allocation to the asset, because in a worst case scenario, they're not going to lose their lives if it's a bad day and you've lost 3%, but it's not going to affect your livelihood or your family and everything else. So finding the right balance. If you want to take more risk, then obviously that's up to you. But all the people that listened to us and did the 2 or 3% in 2013 onwards have done very well from that, and we do definitely believe that there's still a long way to go, and we do believe that there'll be cycles and volatility and all of that stuff as well. So it's a tough one. Look, one thing I'll say is, Zen, sorry to keep chiming on, but one thing I will say is, just because you asked of whether all banks will be adopting this stuff, I do say this sometimes. When the ATM was released, the concept of going to a hole in a wall and being able to withdraw cash, all banks opposed that. They thought it was like ludicrous that you didn't have to interact with a bank teller to withdraw cash from a bank. And then when online banking was developed as a concept, so gaining access to your bank account through a computer, that was also very, very strongly opposed. And I could tell you stories like that from like the history of technology from the beginning of time, when Skype came around with VoIP-based systems. All telecoms companies thought that was ridiculous. Now you don't even really make calls that aren't over data lines and whatever. When Napster came around and started like file sharing globally through a centralized, through a decentralized file sharing network, again, it was all crazy and all the music industry were up in arms. And now you have the Spotifys and the Tidals, and it's the same technology. It's file sharing, but in a regulated environment. So I think the banks that say this is all ridiculous, this isn't going to work, and they'll suffer that a lot. So, but that's up to them.
I mean, on my end, my opinion is that it's like, having Kodak, your big, like the big companies end up falling behind, and then there's these new ones that sort of come out of the ground because they were ahead of the curve. Do you think that's the same case with banking? Like, for example, Xapo Bank just came out of a bank out of 2015. What was it, like 10 years ago or 11 years? Yeah.
No, we were definitely, I mean, we weren't a bank 10 years ago. We've progressed through all the phases to get to the banking piece. But yeah, I completely agree. I mean, it's also, people forget it's like a threat to the model. So if you work in London and you want to send remittances back to South Africa or vice versa, and you use, one of the payment service network providers or whatever, it takes like 3 days or whatever, or 5 days. The FX rates you get are absolutely ridiculous. There's a £25 or dollar cost to a $100 transaction, and the whole thing is just ridiculous. So if you say to those platforms, hey guys, I can brutally enhance the efficiency and speed of payments through stablecoin integrations that are going to allow you near instant 24/7 global payments with no banking system, no intermediary, and costs are going to go to zero, settlement times are going to go to zero. Imagine that from a remittance basis. They're going to look at you and go, so how do I make money now? And like, this is like a massive threat to the ecosystem. And same, like if you're a bank in Argentina and you say to a user, hey, you can only convert $200 a month of your local currency, and then they can move all of those assets outside of the banking system to buy USD denominated stable coins. Why aren't they going to do that? Like, why would they operate? So they will eventually start to adapt, but it's very difficult for them, financially, economically. There are lots of threats to the models, I think. So
Joey, can I just jump in here? Just backtrack a little bit on Xapo as a bank, because we think of banks traditionally, they fall under the Basel Accords. You have different categories of risk. I'm sure you're probably amongst the most compliant because you're fully collateralized. Last time we spoke, I think you had like 29,000 Bitcoin in reserve. So you're not doing any credit. You're not doing any lending. You're basically a custodian. You can earn a yield on the Bitcoin that you have on deposit through Xapo Bank. But the traditional bank would have, on average, they would be about 10% collateralized. They're high risk. They're very leveraged institutions. And this is why you've got to have the Basel Accords there, is to set parameters for different classes of loans. Now, you don't do that. So you're incredibly safe, I think it would be the correct way to put it. So just take us through that aspect of banking.
Yeah. So like when fractional reserve banking, or taking customer assets and deploying them or lending them out, is how most banks make a lot of money. So when I talk about narrow banking, I basically, what I'm saying is that we don't do that. So when I mention things like a liquidity coverage ratios, normally if you have a bank account with whoever it is, they should have at least 100% of the assets, 100% of the custom assets available to draw on and withdraw. And that's why even banks that deploy assets have to do it on, high quality liquid assets, treasury instruments, high liquidity, so they can manage like the drawdown to meet the customer demands. But if they lend their customer assets out under different terms, that's where sometimes you get all sorts of complications around those kinds of models, and there's an element of risk, and of course that risk can be managed. So we have zero risk because we literally don't do that. We literally do not lend out a single dollar of the customer's asset. So when I say if a bank should operate at 100%, and then a really conservative bank operates at like 120%, we operate at like 7,000%. So the banking piece in the US dollars is as secure as can exist in a banking environment. The risk, there isn't a risk. The risk is that treasuries explode and don't exist anymore, and the U.S. government doesn't exist, and the Federal Reserve evaporates. That's that's pretty unlikely. So that's on that side. Legally, we have a separate regulated VASP entity. That's the bit that touches the Bitcoin. So we don't even have Bitcoin exposure on the balance sheet of the bank, just to be clear. It's an integrated service, but legally they're segregated from a risk perspective. So what we do as a Bitcoin, we keep saying a Bitcoin native banking, when you have US dollars, you can deploy them, you can borrow, or you can lend, you can invest in stock, shares, ETFs, etc. Classic sort of simple market tracking instruments, very, very boring and simple stuff. Everything that we do with US dollars on the bank, we try and replicate with Bitcoin. That's why we call it Bitcoin native banking. So for example, you said the interest on a savings account that you receive, there are no such things as treasury instruments for Bitcoin, but we've developed our own product, a fund it's a Bitcoin share price denominator fund. It's BTC deployments only. It's BTC yields only. So we're trying to replicate what you could do with US dollars on an ETF with our own products that we've built, and that will yield between 2.5% and 3.5% or 4%, and that allows you to put some of that Bitcoin to work. You can also borrow against the value of your BTC, and you can use that BTC as collateral for a loan if you want to release the value of the Bitcoin with US dollars, and then obviously you can literally link your Bitcoin to your Visa debit card if you want to. You can switch it on or switch it off. Everything we do is Bitcoin native. So even if you or I have an account at Xapo and you put $1,000 on a savings account, US dollar savings account, all the deployments are standard, highly compliant. Let's just call it basic treasury instruments. And let's say you're earning 3.9% on your USD savings account. We pay the interest in Bitcoin. We pay the 3.9% in Bitcoin. Why do we do that? Well, if you think about the price of Bitcoin over the last 5 years, and if your concern was inflation or whatever, a 3.9% interest rate on US dollars paid in US dollars, it can manage that to a degree, but not sometimes fully. So if you'd been receiving 3.9 or 3.5 or 4.2% in US dollars over the last 5 years on your savings in BTC, the interest rate in USD terms would have been, I don't know what it is, 20%, 30%, whatever that is. So again, we have a very, very strong belief in the Bitcoin network and the ecosystem that's being built, and that's why we integrate that. If people don't believe in that, then obviously they wouldn't bank with us. They would, we're way weighted on the BTC side of things. So yeah.
Joey, on that, what's your viewpoint on stablecoins, and how do you think stablecoins will change the way participants, play in the market?
Yeah, they're fundamental. I mean, we are also stablecoin integrated as a bank. So we've built, SWIFT and ACH payment rails for dollars, FPS for sterling, and SEPA for euro. Those are all classic payment rails. But we've also built blockchain denominated payment rails into your bank account. So if you send me 5 USDC or 5 USDT at no cost, there's no margin, there's no conversion, at direct price, I receive $5 on my bank account, and vice versa. If I have $5 on my bank account, I can enter the Ethereum destination address and send you $5. So we don't custody the stablecoin, we don't hold the stablecoin, but we believe that will be the future. So as I was saying before, all of the good stuff, disintermediation, allowing direct access for global payments at no cost, we already facilitate that through the bank. And I think that is absolutely, I mean, that is by far and away the biggest focus point for financial institutions and growth. The big difference on that, and this might get a little bit technical, when we are USDC and USDT integrated for payments, so stablecoin payment rails into and out of your bank account, there are lots of banks at the moment that are coming together to develop their own stablecoin, but it's almost like within a locked market. So if there are 5 banks participating, they'll allow transactions between all of the customers in those 5 banks. That's not what we would do. We would never do that. So for me, that's like saying, let's create an intranet to go and compete with the internet. Like let's start to create closed loop systems to compete with decentralized open networks of the world.
Actually quite a greedy tactic.
Sorry?
I said it's actually quite a greedy tactic.
Yeah. Well, yeah. I mean, there are lots of things that, I mean, look, they're always trying to find, balances and adopt the technology in a controlled environment, and that'll be a balancing thing. But at the end, I don't think that's the way that this market should develop. But I do agree, I do definitely think that stablecoins will have, they are the payments networks of Web3, or whatever we want to call it. There's no question. So as I said right at the beginning when we started talking about things, for me, it's about meeting the convergence and having the integrations of those systems. And that's why we've built stablecoin payment rails into your bank account. So we want the security of a classic bank, as Ciaran would say, like narrow bank, very, very boring, very, very secure. But we want to allow you to gain access to the entire blockchain ecosystem by allowing those payments to happen. So if I want to send a transaction to you in South Africa now, I could do it from my bank account literally instantly into your mobile phone, and that will start to, I think that is already getting traction, and it will get more and more traction.
Definitely. I must tell you by experience, Joey, I was a very early adopter of Xapo in the very early years. I'm talking about 2019, 2018,
Yeah.
and the early adopters of Bitcoin. So we were just throwing around Bitcoins like fun, right? And I went away on a friend's bachelor's, and I loaded my Xapo card with some Bitcoin, and I bought myself a MacBook. I'll never forget that MacBook. I think at that time costed me about 2.5 Bitcoin, which is a lot of money
Most
today.
expensive MacBook out there now.
That's a great story to tell. But, as a South African, we're always limited by the amount of money that we can take offshore, or even, gain access to that Forex for travel purposes. So this completely avoided that. I was able to move my Bitcoin from my Trezor wallet into my Xapo account, and then swipe that card wherever I wanted. And that was quick, easy, and super accessible. So that is also what pushed us into the space and really wanted us to pioneer, especially in South Africa. And looking back now on Xapo's journey and everything that you've told us, what advice would you give to fintech founders today who are trying to bridge crypto and banking?
Look, I think the most key points are to find the right balance of risk and innovation, to be able to set and operate within those rules that have been developed for hundreds of years and everything else, but to do it in a collaborative and engaged way with the relevant authorities. So there is no way anyone is going to win that battle by a head-to-head confrontational approach to this is right. Governments aren't going to exist in a year. Regulators won't exist in 3 years. Those are conversations you'll always lose. Whilst having it the other way and being able to accept that on day one, it's going to be very difficult. There's going to be a learning process, and to continue to chug away and to continue to keep the sort of eyes on the horizon and the ultimate destination, and work hard to get there. It's the only way that sort of stuff can happen. So just finding that right balance. Also, not to be too locked into this is a model that's worked for the last 80 years, so nothing can change. Like through the history of mankind, it's always been about people who wanted to, push limits for new kinds of adoptions and integrations and to take advantage of new technologies as they've emerged, and that's always happened. And that has to be in the mindset of a founder, of someone who wants to push those limits. So yeah, it's and be ready to work hard and be ready to have some disappointments along the way as well. That's also always going to happen. But
I think be prepared to be debanked, right? At somewhere along the chain.
Yeah, but it's come a long way, right? Those conversations, we were the first to have those card that arrangement with Visa, and we're principal members of Visa and MasterCard. We were the first to do that, and they thought it was really, really, really crazy, and it was a lot of work to get that done. Now it's not that big a deal, but it was a really big deal then, and we've really got to work hard to get there. And then, yes, people will start to come along. It'll start to become a bit of a standard, but it wasn't at all. Now Visa are talking about like almost self-hosted wallets that are integrated to your card with stablecoins to be able to pay and walk around the world. I mean, that's great, but it started back then with them speaking with us going, what the hell is this? It must be like, must be something wrong. It can't happen. But it's really important. And you use the Xapo example, and it's something everyone needs to understand as well. Like when you're using a provider or a platform that offers that service, like you've got to look at things like we make a big deal of charging 0 FX costs on anything that you spend anywhere in the world. So that sort of honest, transparent, open fee thing, it's pretty important because you can also get absolutely destroyed on some of the FX rates that are pushed through some of these providers. And same on buying and selling. Like we buy on a Xapo account, this is public. If you buy or sell Bitcoin, the spread that we take on that price is like 10 basis points. So it's as institutional as you can get in the market, but that would apply to $5. There are companies that charge 1.5%, 3%. I mean, like crazy margins. But, again, like to use that analogy of my mother as the average consumer, she might not understand that, but it's, it's relevant stuff. You've got to pay attention to all of those things as well. And that's a thing of trusting your counterpart. We've been around for a long time. We've built those relationships over many, many years. And I think that does have value.
Yeah, absolutely. I think what's happened is that your liquidity base has grown strong. That allows you to better offer these spreads and fees to your customers, whereas new participants coming into the market, they're trying to grab that margin in order for them to survive, which is, difficult as we know. And like you said, what people are looking for is the most convenience, right? So your mom or my mom or someone in the layman world wouldn't care as long as that making use of the product is convenient to them.
Exactly.
But yeah, we are going into an environment of lower fees and competitiveness across spreads, which I think is important for the end consumer at the end of the day.
Yeah, no, absolutely. Yeah, no question. And frameworks are developing around the world, and standards are developing, and there are all sorts of new, principles of consumer duty and everything else, where it's going to become more and more normal. But at the moment, it's still not quite there. But yeah, we're doing our bits to keep on the front end of that stuff.
Joey, just touch on this subject of not your keys, not your coin. The founders of Bitcoin envisaged this environment where you would basically be nuclear proof against debanking and all this kind of thing. Now, that sounds good in theory, but how many people have lost Bitcoin trying to do exactly that? To move your Bitcoin across to a cold wallet. There are advantages and disadvantages. Maybe quickly run over that.
Yeah, look, I mean, I respect anyone that wants to make that decision. That's up to them. And yes, look, if you have ultimate cold sort of offline control of your assets, the vision of being able to execute a transaction and send a payment from A to B it does not matter who that is or where in the world they are. It cannot be subject to any form of control or restrictions. It's a trust in the technology and what it's able to execute. So I understand that, and I respect it, and people want to do that. Most people, when they started buying Bitcoin and they use sort of cold storage facilities, maybe if you'd done that when I mentioned it to you in 2013 and the price of Bitcoin was $150, it's also fine. Like if you lose the device or something goes wrong, like the fires that broke out in LA last year or whatever it was in the summer, the safes that were burnt down and melted. I mean, I'm not sure if you know how much cold storage there was. It was melted without the right recovery mechanisms in place to recover those keys, and that's a lot of assets. But going back to my analogy, if you'd bought $150 and you stored it on a cold storage device, and then something went wrong, it's not the end of the world. Now it's worth 150,000 or 1.5 million or 3.5 million. I mean, I don't know the analogy. Would you put $3 million of your savings in the mattress under your bed, just because you had amazing locks on the doors and a fireproof window and all of the good stuff? I mean, you might do, but if someone gets access or something goes wrong, you can't get that cash back in any way. So there's going to be a balance between people that want to have that direct control and access over their assets with no one able to ever execute any form of enforcement or anything against it. But there's a bigger move towards people that want to trust the custodian that they're using to store for them in the proper, right, balanced and secure environments. We try and make the balance, so we have like cold storage, like devices we allow for you to integrate with your mobile phone to allow a transaction to be executed. So, but again, if you lose that, it's not the end of the world. So sometimes you can almost like try and find a sort of quasi balance, but ultimately there isn't really. You're either going to be offline and under your own control, or you're going to place trust in a custodian or third party provider. The important thing though, even though, and people sometimes forget this, Bitcoin was built as a payments network, let's call it that, that was the ultimate sort of one of the core missions and goals at the beginning. To an extent, and in reality today, it's let's call it more the kind of digital gold or a unit of value. So if you're holding a unit of value, you're not really wanting to use it for payment services or transactions based stuff. I think the stablecoins didn't exist when the Bitcoin the white paper was written and published. So if you're using it for that, then it comes down to that question: where do you want to hold and store assets of value? Do you want to be your own bank? And some people might be very, very attracted to that. Other people, and I forget the data exactly, but it's many thousands and thousands of people and many hundreds of millions of dollars of assets that have been lost in those environments that are irrecoverable and will never be recoverable. I do think, last point, as regulation develops, as tax reporting develops, as all of the sort of frameworks and authorities start to catch up, I do fear that there will be something of a segregation between, people that, want to not have any access to any regulated service. Let's just call it the sort of layer 2 of saying, these are our assets and we're the people that don't want anything caught within any reportable network. And others, like my mother, the normal people that will say, hey, I don't really want to understand how a complex, multi-sig arrangement or recovery system is for a cold storage device. I just want to own the asset and I want to do it really safely. And that will start to create something of a difference in the way that this pans out. So let's see what happens.
Terrific.
Amazing stuff. That was so informative. Thank you.
I think the beauty part about it is that you can choose.
Yeah.
Yeah,
You have
that's
options.
Yeah, exactly. Yeah, I mean, the difficult thing sometimes to remember that there are very complex and detailed, blockchain analytic systems. Everyone knows Chainalysis and TRM and Elliptic and all these guys. Maybe not everyone knows that. So, the analogy will always be, if you go to your bank account and you deposit $100 of cash, the bank has no way of seeing where that $100 was used last week or the week before or a month ago or 6 months ago or when it was printed. With blockchain based payments and systems or units of account like Bitcoin, you can run those analysis, and they will run those analysis. So when you go into people that are receiving payments into cold storage devices and they don't really know where it's coming from and they don't know anything around it, and then they execute another, you start to risk score that wallet. So ultimately, if you don't really know what you're doing and you don't really know the services that you're interacting with, or you don't really know who is sending payments in and out of that account, that wallet, that cold wallet, ultimately, if you then want to buy a house and you want to convert and send a transaction to a bank, you're going to have a very big problem. So I think that, some people don't fully understand like the potential downsides of operating in systems that they don't fully understand, and the data they're accumulating on that wallet and what they're doing with it. At the end of the day, if you're going to converge or you're going to touch a bank or you're going to send it to an exchange to convert to USD or any currency, that's going to be there for anyone to see. That's going to be there to be picked up and scored. So it's not as simple as I can do whatever the hell I want and everything will always be fine. It's there's a bit more risk from that.
Right. Okay. I think let's wind this up. I think that was pretty fascinating. What a rundown. I feel enlightened as to what the future of banking is going to look like, and the future of payments as well. I think there was, very briefly, there's one other thing I did want to ask you, and that's this universal money address. I think Xapo introduced it last year. This is basically touching again on the whole payments network globally, but this is something that allows you to send from your Xapo wallet to a phone, right? All you need is a phone number, as far as I understand. Maybe just quickly touch on that.
Yeah, so the UMA network is basically it's a payments network on the Bitcoin L2, which is the Lightning network. So what's being built on Lightning, and the guys behind the integrated service that we use are called Lightspark. The guys behind Lightspark are, I mentioned Libra at the beginning, David Marcus, Christian Catalin, all those guys. What Facebook was trying to achieve on that kind of open network, they believe that the Bitcoin network, being the only really truly open, decentralized network that exists in the globe, they believe that by building a payments layer on the Lightning network, basically having a decentralized framework, the Bitcoin ecosystem, and building a payments network on top of that, allowing people to send transactions, would be the way that you could actually create a global infrastructure to allow those things to function. And UMA is basically a piece of that. You don't need a complex 100,000 digit address. You need a very, very simple money address that's basically like a name attached to the company or whatever it was, and it allows you to send cross-border payments over Lightning, so on top of the Bitcoin network and protocol. So again, this is like, we'll see what happens. No one can be 100% sure what the future of global payments is going to be, but the analogy that I used before, if Stripe, a giant company, come together and try and build out a global payments network, they are going to be managing that. They are going to be in control of that. It's a very, very centralized counterpart that's running an ecosystem. In the example of Libra, it was the Libra network that was a very, very centralized grouping of people that were going to control that. So will the future be controlled by one American company that wants to build a global network of payments and will always be responsible to everyone? The central bank in South Africa, India, Japan, everyone will look at that company. Or option two, will it be built out over a fully open and decentralized network? And that is where the Lightning, Lightspark sort of vision is, and were more weighted to that being the way that. So that is a very long way of describing why we've done that and why we believe in the UMA approach on Lightning. That's what we're backing.
Great. Any further questions, or should we wrap it up?
I think we can wrap it up. Thanks, Joey. I appreciate
Lovely,
it.
Joey. Yeah.
Joey, thank you
thank
so
you,
much for that
guys.
insight. It was amazing.
Yeah.
Yeah, no, good stuff. Well, yeah, always happy to share things and stuff that's happening in the world. We've seen you're seeing what's happening in America now. We've talked about stablecoins a couple of times, but the Genius Act has come through, and they are going full tilt. And I'd also say I don't know how much is happening in South Africa. I'll say one last thing, which is we talked about people buying Bitcoin and cold storage and versus sort of custodial infrastructure providers or whatever. What's definitely happening a lot, massively in the US, definitely in London, a lot, and now parts of EU and probably other parts of the world, but is Bitcoin as a sort of corporate treasury instrument. So how many of the big listed companies are now also forming? So they're not all copying MicroStrategy in the US or Metaplanet in Japan and going like full tilt Bitcoin balance sheet, but a lot of them are now exploring, this asset class and how to gain access in the right way. And that's why the numbers are so spectacular on the ETFs and everything. But that's, again, where platforms like yours and platforms like ours were very, very different. So, if you buy a BlackRock ETF or you buy a Grayscale ETF, Grayscale costs like 1.5% to own. The BlackRock is, I think, 20 basis points or something. And again, run the analysis. If you'd paid 20% management fee or a 20 basis point management fee on the price of Bitcoin over the last 5 years, do the calculation to see what that would have cost. If you pay 1.5% management fee on the price of Bitcoin for 5 years, do the math and see what it would have actually have cost. So we're much more purists. We allow exposure to the actual asset, not the asset price wrapped in something else. And again, that's something that people need to think about and understand. It's not just as simple as buying the price.
Yeah.
100%.
Great, Joey. Thank you so much. Let's stay in touch.
Good stuff.
Again.
All right, guys.
Yeah.
Good to meet you.
Thanks. Oh, and will you
Thanks a
keep
lot.
your